All right, scholars, we're now going to take a look at a comprehensive income statement, and we're going to decide all these items right here, and we've got like 12 of them. Which ones go in net income? Which ones go in other comprehensive income? If we look them over, you can see amortization of pension costs. That looks like it's part of Puffy, right? That's the pension. Foreign currency translation gain. That looks like the F of Puffy. Loss on foreign currency transaction. That's a real transaction, gain or loss. That's going to go in income. Gain on foreign currency remeasurement. Remember, remeasurement goes to the income statement. It's the translation adjustment. That plug. I used a dirty four-letter word, didn't I? Plug. Ooh, I said it again. Well, that plug is going to wind up, ultimately, if it's translation, it goes to OCI. If it's remeasurement, it goes to net income. Gain on proceeds of an insurance, that goes to net income. Gain on sale of equipment, that's a no-brainer. That goes in equipment. Loss on a cash flow hedge. We're making the assumption it's effective. That's the E of Puffy. So that's going to go over here. Unrealized loss on trading securities. Notice it's trading. Trading goes to the income statement. It's only available for sale. That would go over there. Unrealized loss unavailable for sale. That's the U. Unrealized, unavailable for sale. Gain on a real gain unavailable for sale. Real sale. That goes in net income. Impairment loss goes in net income. Instrument-specific credit risk, that's the new one. That's the I, and that goes up here. So I've got an idea of what I'm going to do. So let's take a look. I'd like to get the Puffy done right away. So I'm going to grab them first. So I'm going to take the pension, and I'm going to move that up. There's the P. Now I'm going to look for that U, that unrealized loss. Notice, it's just a mark to market on an available for sale. So this one goes up here. That's number 2. PUF, the foreign translation. I'm looking to find that one in here. And what I'm going to do is I have the loss on foreign currency transaction. No, foreign currency translation gain. So in this particular case, foreign translation gain, I'm going to move that over. Then I know that the I is the instrument specific. And then I'm going to go to the very last one, loss on an effective cash flow hedge. Unrealized loss on trading. Nope, loss on cash flow hedge. So this one right here, I'm going to move up there. There's where I have my Puffy. Pension, unrealized, foreign, instrument specific, and then effective cash flow. Those I know will go in there. The rest of these all go in net income. So I would move, in this case, I would move loss on foreign currency transaction. That's a real transaction. So that gets to the income statement. Gain on a remeasurement, that goes right there to the income statement. Gain from an insurance recovery, that clearly goes in the net income statement. Gain on sale of equipment, that would go up here, no question about that either. Unrealized loss on a trading. Trading goes to the income statement. Available for sale is what we put over there. So this moves up here as well. Then we have real gain. Real gain unavailable for sale. That goes to the income statement. So we move that over here. And then last but not least, an impairment loss. That would obviously go into the income statement as well. So there are the items that we're going to be looking at. Hopefully this helped you understand where they go, and you're better prepared to earn more points and passing the financial area.